Good afternoon, everyone, and welcome to the 9th episode and the final for this series of Agri-India Meet 2.0. Today, we have a very interesting and intriguing topic that we are going to be discussing. It's the evolving landscape of Agri-Fintech in India. And to navigate us through the session, we have Mr. Hemendra Mathur, who's a very well-known figure in the agri-tech industry, co-founder of ThinkAg and venture partner Bharat Innovation Fund. We have Mr. Suresh Venkateshan, who's the group head information technology at Samunnati. Mr. Nitesh Thakur, who is the founder of Grey Matter. And our moderator for the day is Mr. Ashu Agrawal, who's the India lead and global founding team member of Asia Tech Journal. Mr. Agrawal, I would request you to please come to the dais and start the proceedings for the day.
Super. Thanks, Vikas. Thank you. Good afternoon, ladies and gentlemen. Saturday afternoons post lunch, I think is the most difficult thing that one can be sort of doing, right? But we'll try and make it very, very exciting, right? I think agri in general, I think is something which has been close to all of our hearts, right? All the speakers here, I'm sure all the listeners are equally involved and excited about the possibility of agri that agri sort of offers, right? And I think with the way fintech has kind of evolved in the last couple of years, I think has been absolutely spectacular, right? I think a country like India with so much of diversity wouldn't have seen the growth, which we have, without fintech, right? But when we talk of fintech, I think a large part of fintech, we continue to sort of talk still about it in evolved urban markets, right? I think agri is something which, parts of it has been touched, right? But the challenges continue to exist, and we'll talk about all of that. Through the course of this conversation discussion, we'll try and explore the challenges and of course the opportunities, the larger opportunities, and we'll open this up for Q&A towards the end of the conversation. Himed, I'll come to you first. I'll quickly request my guests to introduce themselves. They are people with a phenomenal track record, great experience. Himed, I think can clearly be termed, if I can call it that, right, or at least be named one of the marquee people when it comes to the agri and agri-tech ecosystem in the country, right? I think he's somebody who's really evangelized it from the front and for the longest time possible. Somebody who understands a lot of complexities that are there across the segment, and would know each of the segments in equal amount of depth, right? So, Hemend, would be great if you could introduce yourself, and I'll quickly come to the others.
Thanks, Ashu, and thanks to the Pusa Krishi team for inviting me to this wonderful webinar. So I'm Hemendra Mathur. I work as co-founder of ThinkAg. It's a platform for accelerating adoption of innovations in the agricultural space. I also work as venture partner with Bharat Innovation Fund, an early stage deep tech focused fund. And lastly, but the most excited part of what I do is to work with a lot of entrepreneurs and startups in this ecosystem as mentor, advisor, and board member. So I look forward to a very interesting discussion. Thank you.
Super. Thank you, Hemend. Suresh, tech is important, right? I think tech is something which I think eventually fintech is something which is going to ride on the back of the technology integration that we can do, right? Suresh, you have an interesting task in hand. If you could introduce yourself.
Okay, thank you, Ashu. Good afternoon, all. I just finished my lunch, so I should stay away through the session. See, there are a couple of things here. One about my own background in terms of being a career technology person in the financial services industry. And I've seen how the evolution more in terms of from a branch banking, where we transacted from the standalone machines to now what we call all the new age fintech. So it's going to be an interesting session today. And apart from my own interest in the industry and the fintech industry, I'm also a farmer who've been doing agriculture for the past 15 years. So hopefully the two experiences as a user as well as someone who's in the technology, I'm sure I will add something here in the session.
Super.
Looking forward.
Thanks, Suresh. Nitesh, if you could introduce yourself, all the good work that you're doing at Grey Matter.
Yeah, sure. So I am basically from MP, and then after my engineering worked in the technology sector, and then after MBA moved to the finance sector with L&T Finance. And I belong to a farmer family, so most of my relatives are into farming. So that was always on the back of my mind, where in 2018, I left my corporate job and ventured into agri sector. And then subsequently in 2021, started Upaj. So Grey Matter Technologies Private Limited is the name of the company. The brand name is Upaj. And we are working we started in 2021 with 3 villages and 3 employees in Bihar, in East Bihar district. And in the last 1.5 years, now we have moved to like 150 plus villages across Bihar and UP with 52 team members. And we started with just one financing partner, and currently have 5 NBFC onboarded based on our this community commerce and panchayat model. And happy to share reviews on the Agri-Fintech and share other people.
Amazing. Nitesh, we'll come to that, right? I think there's a lot of, there's a lot that I'm sure a lot of other people can learn from you through the course of this conversation, right? So, but before I do that, right, I'd love to sort of take it to Hemend. Now, Hemend, Agri-Tech, we've seen, excitement, and, we've also seen it plateau out, right? Because, as you sort of deep dive into, the Agri-Tech, so from a distance, it could sound amazing, right? It could sound beautiful. It's a very, very large market to tackle. I mean, any piece that you kind of pick up, right? It's essentially say commodity, trade, financing, anything that you pick up, right? From a distance, it's like very, very large. But when you get down to executing it, becomes a massive challenge, right? I mean, where are we? And what's your sense, right? I mean, how do you kind of see it playing out, right? I mean, we hardly have unicorns, coming out of Agri-Tech's, the space, right? While this could have been much larger. But I think the unicorn discussion we can have a little later. But would want to understand, right? Where are we? How are things kind of playing out, in a market which is so disconnected at many levels?
Thanks, Ashu. Yeah, it's a good question to ask, especially in 2022. I think it's almost a decade since this version of Agri-Tech evolved, largely led by entrepreneurs. On the positive side, a great amount of interest, enthusiasm by startups to look at this sector, with many of them coming from non-agricultural background. So this is quite fantastic. For the first time in our history, we saw digitization of food supply chain, which kind of is not just necessary, but very, very critical to connect Bharat with India. So I think that process started, and thanks to these hundreds of startups who went out of the way to build some very interesting tech-enabled business models. And also, thankfully, there's no dearth of investors. Over 200 investors in India who invested in Agri-Tech. Quite a diversified range, and you can name anyone, and I'm sure any marquee investor has some bet. Because usually extremely risky. So I think those are the positives. But having said that, as you rightly mentioned, we still have a lot of ground to cover. And I think the biggest challenge that I see for Agri-Tech solutions now is adoption by farmers. I think there's enough tech, there's enough business model, there's enough diversity. But having said that, maybe 5 to 10% of farmers in India have adopted some sort of Agri-Tech solution. So there's a huge headroom in India alone. We are a country of 150 million farmers. I guess we can do a lot more when it comes to farmer adoption. And globally also, there are almost 500 million farmers out of that 470 million farmers being smallholder. So a lot can go, a lot of these solutions from India can potentially go to other markets, since the farm profile and the farmer profile is very similar. Now, how to drive adoption is going to be a very interesting topic. We can discuss at length, but I see the biggest gap in today's market is an intermediate level between an urban sort of centric, as in a Bangalore-based or a Delhi-based Agri-Tech startup, and the farmers which are remotely located. And that layer is essentially the rural entrepreneurs, the micro entrepreneurs, the FPO, the NGOs working in rural areas. How do we create that channel? How do we sort of get them on board so that they can go and talk to farmers and talk about the solution? I think the biggest challenge for farmer is all of these solutions are very new. The average age being about 3 to 4 years. And it's not a good enough time to create that kind of trust with farmers, right? And farmers who have very limited risk appetite, given an annual income of, let's say, 1 lakh, 1,50,000, how would they, or why would they adopt a new solution? And that's where I think it's very important we create rural incubation, we create rural entrepreneurship, which can bring these two worlds together. And that's why I see that that's a challenge, but a huge opportunity. I personally believe we will have in excess of 10,000 agri-tech startups by the end of this decade. And there's a potential to create at least 10 million jobs, entrepreneurial models in rural areas. And that to me will be a big win, for everyone, for the farmer, the startups who are working in it, and of course, a lot of rural youth who can potentially be part of the ecosystem.
Interesting. Even, I wish that, a lot of what you're saying. Hello. I wish that, a lot of what you're saying essentially comes true, right? And we're going to discuss about, the adoption related challenges, right? Because, when you talk about agriculture, there's massive inertia that we come across, right? And this is something across stakeholders. But, before I do that, I'll come to Suresh, right? Now, Suresh, for fintech to get it right, it's important that, the continuity in data, right? And I think digitization, across silos that are getting created, right? It just becomes so much more important, right? Now, unfortunately, when you look at, so there are two challenges fundamentally, right? One is, inhibition, right? Because, when you typically talk of the agri ecosystem and the, and the farmers, right? They're not necessarily, a large part of them are not necessarily very savvy, right? When it comes to adoption of the latest tech, that's number one, right? Number two, even if they have to, because it's a compulsion, right? Say banking ecosystem or whatever, right? Now that essentially continues to be, all of that information is locked in a silo, right? And third becomes, say, other distribution or awareness pieces that come to them, right? Which are not necessarily, say, as continuous, right? It's kind of broken down. It's not as consistent, right? Now, all of these three are very, very important, right? At each level, because, they found, kind of put or balance the foundation of, a fintech play in the country across these stakeholders, right? And that's a huge challenge. What's your sense of it, right? While I think we've nailed technology, I think technology development is not necessarily a problem, right? But how is it that you ensure that, it becomes a continuous system where, there's insight and access into all sorts of information which is available, which is locked into a silo, right? Unless we do that, it'll be very difficult to build right kind of predictive model, right? What's your sense of it, right? I mean, from a technology standpoint, how do you see all of that evolving, changing going forward, right? And if I do achieve the kind of numbers that Himen mentioned of, right? I mean, these are some very, very critical pieces, right? What's your sense of it? How do you see it?
Okay. I think the fundamental approach that we're looking at in other sectors versus agri, be it in the fintech or even the digital technologies, whatever we talk about, has to look at more an inside-out approach rather than outside-in approach. Why I say that? Especially the country that we have the diversity, about 140, 150 million farmers with different languages, different climatic patterns, and also the penetration of the enablers, be it the infrastructure. Those are the things that we need to start to think about. Can I request Mohan to go on mute?
Yeah, please continue.
Yes, sorry. Thank you. So that's the first work that we need to do, right? In terms of what we call connecting the farmers and agri enterprises, because there are two segments. One is the supply side, which is the farmer, and demand side agri enterprises. And there again, we look at most of the small agri enterprises also need the technology intervention, especially in the villages or in the tier 3 or tier 4 cities. So that's the first challenge that we need to look at it. Now, the second is that about the inertia, that I don't know what the technology, what will happen. Now that slowly, courtesy the pandemic has kind of changed a lot of it. I want to kind of share a very brief example in terms of how on the ground we are seeing the transformation is that last year in August, we were kind of doing a field survey and study, and we also kind of looking at how the mobile phone penetration is happening in the rural villages and how much of awareness, because we are doing a survey. Interestingly, while we are doing all of it, the volunteers were struggling a little bit because of the language, common language, etc. The children who are in class 9, 10, 11, and 12 in the villages, because of the pandemic, they got used to the Zoom and all the other Google Meet kind of thing. They started pitching and said, "Uncle, can we come and do this survey?" And in the 15, 20 days when we did that, it was kind of an eye-opener. What we thought we are hitting a kind of a roadblock, probably in collecting the data. That kind of changed. So that's one segment that we should really look at, especially the youth, the next generation. They can be the bridge between that, what we call the so-called information silos into the digital highway. So that's a second challenge that we need to address. The third thing is we also need to look at what we have the diversity in terms of the multiple languages and the enablers, which I was talking about, the network penetration, or even availability of the instruments that will help them to connect into the information gateway. Say, for example, if you need to communicate, what channel that we need to look at, how I'm going to receive it. The reason we have seen the villages are not being brought into the mainstream is also about the accessibility. Now, say, for example, in our own areas, when we wanted to reach out to the farmers and say how much of the access to the liquidity through the formal channel that we are working on, let's say in our own experience of lending to the farmers, the first thing that we come across is that unless you have a branch network close by, we can't reach out to the farmers. We can't communicate to them. So that is something that we need to leverage the technology. One could be through the network mobile, and second could be what we call the OTT kind of a platforms where the dissemination can reach to them. So that's the one segment of the story. The second is that we also want on the ground level, the enablers, what we call the village level entrepreneurs or the Kisan Mitras. These are the enablers, if we can kind of do it correctly, because as we were deliberating, there's a lot of solution available in the market. All we need to do is that little bit of curation, little bit of configuration, but then reaching out to the farmers to understand what the real-time needs are and use the data that is available, because we also spoke about the data silos. And the good thing is that we see a lot of efforts are being done by government in terms of bringing the ecosystem players together. So we see a lot of not-so-profit or not-for-profit initiatives are also happening together. So it's not like what we have seen in earlier about 3-4 years back. Now, a lot of things are happening. And with the availability of the data through the satellites and drones made our life much more easier than what it used to be before. So the point is that, are we in a better position than what we were before a couple of years? Absolutely, yes. Now, the question is that whether the momentum is there at this moment, that's where we need to kind of bring everyone together, both from an industry, the policymakers, as well as the volunteering organizations, plus the people in the villages, the youth in the village who have a better access or better understanding. So I think with all these 4 quadrants, we should be able to kind of really harness the benefit. One last point that I want to add up is that, Hemendra was talking about, out of the 500 million population around the world, India is the universal representation. Because if you look at be it Africa, be it any other emerging markets or even advanced markets, so all the representation is there within our own geography. So somewhere I think how the software has kind of really taken up India into the global map. So it's the right time for us to leverage the Agri-Fintech to move forward in that direction.
Interesting. Thanks, Suresh. That's quite an elaborate, perspective, and I'm happy, how you've kind of broken it down and covered, right? One observation, I think, with OTTs, I think we're becoming an entertainment-first economy in many ways, right? And I think I fear that, that shouldn't become a primary tendency, right? We are a country which likes drama, right? So I think that's a challenge, right? But no, I think some very interesting points, right? And I think we'll have to really see and evaluate how it kind of plays out on the ground, right? Because a lot of this is it's going to take a lot of effort and at a design level, right? And I think, like you said, right, many agencies coming together. I hope they get to it together and achieve it, in the right format, right? Nitesh, I'm going to come to you right now. I think you heard Hemendra, you heard Suresh, right? You are in a game where you are, you've possibly experiencing it very, very closely, right? Now, when I look at, the agri ecosystem, right? And I think, while this has been an area which has been a priority sector lending, there's been a focus, right? But, it continues to be plagued with many, many problems, right? I mean, lending has not necessarily been easy, right? And lending is actually the first step within the fintech space, right? I mean, when you look at, because, I think velocity if you can improve the velocity of, revenues or earnings, I think that substantially increases, when you have the right kind of lending framework available, right? And I think everything then kind of gets built on top of it, right? What's your sense of it? I mean, how do you see this? This is fairly complicated, right? How do you see all of this, play out, right? What's your first-hand experience? And I would love to understand some elements of regionality, right? How are you kind of handling all of that? Because, India, we have, we're not a homogeneous market, right? Right. And I think we have those regional complexities that start to kick in, right? What's your sense of it? How are you kind of seeing all of this? Would love to understand a little about, how you're kind of modeling some of the risks, for example, that you have, in the lending framework.
Yeah, so one is instead of looking at it as like one agriculture market of 150 million farmers, it will be better like if you really want to serve, really want to make a meaningful impact, then have a localized area. So we started from Bihar, then expanded in UP. Now in the Bihar where we are operating, there itself the market is of like in the 2-3 districts combined is of more than 20 lakhs farmers, which translate into more than 200 crores of opportunity in that area. So when you are looking at like 150 million farmers and 25 billion market, it is very, very difficult to define one product. So when we started with Bihar, we started with one product, which is a land size based financing model for the crop that is grown in that area, which is maize and wheat in the winter season, and then paddy in the monsoon season. And when we expanded in UP, it was little bit tweaks around that model in that product, but it was also fitting for the UP farmers. So for that, we got like huge demand from the farmer. Like we are facing the problem on the supply chain side. But if you talk about like whether farmers are willing to subscribe to the Upaj land-based subscription model, then we've got like more than 5,000 farmers in the last 1 year. So this is on the one thing that if you are really adding any value, it should not be just a technology play where there is a mobile application and then you are expecting farmer to download and put their KYC, because for financing the KYC will get involved. So you need to have some kind of either trained workforce, or as Suresh and Hemant sir was mentioning, that you need to have some kind of like village level entrepreneurs who can take care of this activity. So we have our field of employees, and one field person manage a panchayat. So the operating model is very well defined. One panchayat, 100 farmers, one field officer. That is our business model. Make it profitable, go to 10 panchayat, go to 100 panchayat. So then it becomes, it's not like a central model where we need to get 1 lakh farmers to break even. 100 farmers, we can recover our 60% of the cost. 150 farmers, we break even. 200 farmers, we start making money. Now, second is on the cost of acquisition of the farmers is high, because you need to have one field person. And so it is very important, you need to have a repeat client. And when repeat clients will come, when they see the value, when you are marketed it for the first time. First time you'll acquire it by doing marketing, and you will, for us, it is around 120 rupees per farmer acquisition cost. So if the farmer,
sure.
Yeah.
No, go ahead, please.
If the farmer is not coming back, then the model becomes unsustainable. And farmer will come back when they see the tangible value, not only the marketing value. When they see in the first season, they are able to save cost on the logistic part of it, on the financing part of it, and agri advisory is adding value. And that will come only when you have last mile presence. Just by having a technology play is, so far it doesn't seem somebody has come up with just by having a mobile application, a PM, this product market fit. But you need to have some kind of last mile presence, because recovery is the most important part of this.
Correct. Nitesh, we're gonna talk about that in just a bit, right? I mean, recovery continues to be the biggest challenge, right? Even I'm gonna come to you, and an important question, right? Now, this is more, when we talk of agri, I think, so I'm talking more about, for example, incomes out of farmland production, right? I'm not talking about processed category as such, right? I'll come to processed at a slightly later point, right, in the conversation. But when you look at all of this, right, and the current mechanics that, for example, we have, right, which is say mostly MSP driven, right? There's little which is happening on the market side pricing, right? Demand supply pricing and all that, right? I mean, in a way, kind of there's a government intervention, right? Which kind of comes in and gives a certain kind of a comfort, right? But what also happens in the process is that it kills aspiration. Is essentially how I look at it, right? And when I say that, I mean, that becomes a massive disincentive for farmers to go out and fight out harder, right? Have a higher yield, right? Adopt to mechanics, so on and so forth, right? Because at the end of the day, I know for a fact that my upside is sort of capped at that much, right? And we can always agree to disagree, right? But when you look at a larger set of farmers, right, it works negatively, which is not necessarily very healthy, when you're looking from a lending standpoint, right? Because I mean, if you have an aspirational audience, the hunger and the requirement and the appetite for capital is going to be just so much more larger, right? Which kind of is missing out. What's your sense of it? I mean, how do you see this? Is this changing, or something else needs to be done, right, to change this or bring in the right kind of aspirational value? I think all of us through the in a consensus have highlighted entrepreneurship, right? And which essentially means that you are looking at cultivating people and harnessing the energy and aspiration, right, to go out and create a much larger value. What's your sense of it, Himen? How do you see this?
So I think there are three dimensions on which we can sort of create those kind of inspiration for farmers to look at agriculture differently, or adopt a solution, agri-tech solution, or an innovation, right? And these three dimensions are essentially ability to improve income, which could be through better market linkages, price discovery, through value addition, processing, and the second dimension is essentially around optimizing the cost of input. A lot of input application by the farmer is, I would say, gut based, which is not necessarily long, but still there's a potential to reduce. I think we are using much more urea than we need to, and that applies to a lot of inputs. Farmers are not even aware of a lot of inputs which are available in the market, which can reduce the cost of input application. How to reduce cost of fertilizer, agrochemical spray, how to reduce water used in irrigation, etc. So there is a huge potential to reduce cost. And third dimension, which is often ignored, is the power of innovations to de-risk farming. I think that is also a very important parameter. Again, given the income levels of majority of Indian farmers, if you anyway are de-risking farming through innovative tools, through insurance products, through fintech products, that also goes a long way in making farming more sustainable. So I think, in my opinion, of course, regulations are there to stay, and they were created for a certain purpose. But I see even the regulatory space changing for good. Last week only we got an announcement from the government that the online sale of pesticide is allowed, right? So this is these are small steps which can hopefully make regulations very sort of I would say friendly for innovators, as well as helping the farmer at the end of it. But I think clearly from an innovator perspective, I think farmer is an entrepreneur. Anything which improves farm economics, and my demonstration is key. I have seen in general the impact to the extent of 20,000 rupees to 30,000 rupees on an annual basis if farmer has adopted one of few agri-tech solutions, especially market linkages, optimization of input cost, some fintech solution which can help him to access institutional credit. Even at 16-18%, it's far attractive than the credit that the farmer gets from the local money lender. So I think that is the overall landscape that I see which is emerging. But having said that, especially on fintech, I think both Suresh and Nitesh talked about it. It's a huge opportunity in waiting when it comes to agriculture. We know urban fintech is getting saturated. Like the thousands of startups focusing on top 200 million consumers, but there are at least 600 million consumers waiting to be addressed in the rural sector, not so including farmers and other rural folks. So I believe there's a potential to build a lot of innovative fintech solutions, especially which are cash flow based, not necessarily based on mortgaging land, etc., which can drive the use of credit for specific farming purposes. what Nitesh is doing at Tupaj, I think that's a fantastic example. Making a lot of these models closed loop to give bankers comfort around recovery, building interesting models for risk assessment, risk mitigation. I think that's a huge opportunity. We recently saw SatSure coming up with a farm credit score, which kind of got adopted by TransUnion Sibyl, and it jointly publishing these reports, taking it to multiple banks and cooperative banks, etc. So I think there's a huge opportunity. Even capex financing, I personally believe there's a huge potential for near farm processing units, which typically cost less than 5 lakhs, less than 10 lakhs. But it's not attractive for bankers, right? Given the small ticket size. So how do you create that portfolio which can drive processing and storage at the farm level and create more income for the farmer? Because typically these are the farming community people who spend on it and they are willing to invest on it. But if there's a bank financing available, it makes it even more attractive. Post-harvest financing is an ocean. We have not even touched upon it. But unfortunately, only $5 to $10 billion worth of post-harvest warehouse visit financing is happening. I think that can open up quite a bit if we sort of integrate right technology around, sort of digitizing warehouse receipts, building market linkage, building models for stock audit, etc. So yeah, I think that is where we stand. That's a huge opportunity, in my opinion, more than $500 billion a year opportunity in working capital and capex financing, which is there. And I'm sure some of the entrepreneurs who are working on it, there are a lot of Agri-Tech pivoting to Agri-Fintech. I'm sure they will be able to crack it.
I think Hemant, somebody said, right? I think it was Tom Cook possibly. He said that eventually every company will be a fintech company, right? I think that's possibly what you're alluding to. But Hemant, I'm going to talk about the risks element, right? Which are kind of there, across the entire value chain that you kind of spoke about, right? But before I do that, I'd love to hear your thoughts, right? I mean, a follow-up question. When we talk of, say, connectivity, right? What you start to see in a connected market, right? Is that the markets become expensive eventually, right? Because in a venture-funded environment, right? It's at the end of the day, it's just about, say, one or two players, right? I mean, that's the nature and the tendency of these markets, right? Which essentially means, the point that you highlighted, which is essentially cost of production. Once there's transparency available, right? Or once there is transparency, right? Don't you think this is possibly something which could also become a point of concern? I mean, the way it is right now, the way it's fragmented right now, and I'll give you a small example of this, right? I was in a recent conversation with, somebody who's a big buyer, right, in the B2B environment. Now, his take was that I already have a supplier, right? Now, the supplier in his individual capacity absorbs about 60 days to 90 days of credit, right? No questions asked, right? Because, the cost of operations of that supplier is much, much smaller. And that is his reservation of shifting to a more, one of the fintechs, right? Within who are offering a similar solution within the same space, right? What's your sense of it? I mean, connected markets make operations expensive because, there is little price discrepancy. I mean, or there's dichotomy available or arbitrage available, right? What's your sense of it, and how do you see it? I mean, do you believe that this is something which could really service well, or could eventually become or translate into a higher cost of production?
So if you look at agriculture, my sense is the cost of capital for farmer is in excess of 20%. Right? And there are very few businesses across the world who make money while paying up when the cost of capital is upwards of 20%, right? So clearly, I think what connected markets can do, if I understood it correctly, the whole supply chain, there's a fragmentation between farmer and consumer. There are like 12 intermediaries, right? And of course, each intermediary is playing a role.
Sure.
But there's opportunity to organize it. There's opportunity to digitize it. There's an opportunity to create efficiency. And if you make it vertically integrated, right? My guess is the cost of capital can substantially come down. The biggest risk for a banker today lending to agriculture, he doesn't know who the farmer is selling to, who's the buyer, right? And and that's where the struggle on recovery. Yeah, like you have to go to millions of farmers to collect your loan. But if you have the buyers identified, what Samanut is doing, and I think Suresh can talk about it in more detail, is bringing market linkage element, which makes financing much more easier because you know who the buyer is. So instead of going to 1,000 farmers, I go to one buyer who's buying from the farmers, right? And sort of build a tripartite arrangement to make it closed loop. So I think in case of agriculture, I would say the platformization, the vertical integration, the coming together of input-output financing, data advisory is potentially going to reduce the cost of capital and make capital available to farmers, especially under 15%, under 10% potentially as we digitize more and more. So I think that is the kind of impact it can create and make the economics look very different. I can tell you, farmer has a good gross margin. He even has a good EBITDA.
Right.
The EBITDA, the healthy EBITDA becomes a very sick pet or negative pet because of the interest cost.
Right.
I think that should be a focus. If we can optimize it, reduce it in whatever way, and that's where integration or what in your language, the connected market can go a long way to make this happen.
Interesting. I think you're addressing this point in a slightly different way, right? But I think it's an interesting way to sort of look at it, right? Suresh, Hemend, has pointed a question to you, right? Would love to hear your thoughts on it, right? But what I have seen, mostly is some of the most successful startups have not necessarily gone. I mean, of course, they experimented with lending, but they eventually got down to. So either they got back to bill discounting. Essentially, all of these guys have been playing it safe, right? I mean, would love to hear your thoughts on what Hemend highlighted, right? And some of these challenges that are there in the fundamental lending, framework.
Now, there's also a question by Bipin in the chat box, almost on the same line, saying that now lenders are looking at more in terms of financing. But what happens to the farmer when it comes to in basically three parts? Producer.
Yeah.
Is it better now? I switched off the video. Yeah. So I would like to address this in three segments. One, the farmer, what he produces. So how he can take it to the market, because end of the day, any producer need to have a market access to the market. So that's one. The second part, the cost of production per se. And third, what are the things that we can look at it? That's where the whole thing, right? What industry is doing, why they're not doing what they're supposed to do. The first and foremost, from an access to the market. Now, if you have to kind of really unwind back about 30 years, right? I'm sure some of us would have seen that. The farmer produces, he goes to the nearby market or even comes to door to door to sell his produce. Mostly, you put it in a bullock cart or put it in something else and take it forward. Now, fast forward today, what's happening is that the farm gate procurement is not happening and the farmer is forced to go to nearby consolidation point. It could be a mandi or it could be a Arathias or whatever. So that's one area where the maximum we can do is that because beyond a point, the supply chain, the cost of transportation, apart from cost of production, and even the cost of carry also need to look at it. These are the three main elements, right? So I produce, even if I produce cheaply, can I transport cheaply? Can I sell it at an optimum price? So we need to look at this in a continuum, right? So that's a one dimension that we need to look at it. The second part is when the farmer is ready to sell it, when to sell it. Now, that is another dimension that we all need to think about it, because most of the times what we have seen is that, and that's where Samriti is kind of working on two spectrums of the coin, not only lending, we also kind of enabling the access to the market, and we are also facilitating what we call the market linkages. So the buyer wants to pay the money later, whereas the seller wants the money today. So that's also, there is another kind of conundrum. So therefore, what happens? Then the buyer demands, right? If it's a buyer's market, then they're basically going to demand and say, look, if you want the money, I can give you only this much. So that's the fundamental, the core of that, the formal access to credit and price realization are the two elements that we need to address parallelly or simultaneously, not one over the other. Right? That's the first problem.
Sure.
The second problem is that infrastructure, because most of the places where we look at, in fact, there is an interesting statistics. India is one of the leaders in terms of when it comes to the farm gate into the consumer, the food wastage itself is about 30 to 35%. So if we can even focus on that one particular area, reduce that wastage even by 10, 15%, now the kind of output that unlock potential is humongous. So that's where we need to look at the storage or the transportation. And this is where the technology can play a much, much bigger role, because we need investments in that particular segment. And this is where the farmer collectives, in our own experience, where they can play much more bigger role, because they understand, they represent the farmers, they can look at it. The third point is that today, the farmers, they don't have direct access to the end consumer, people like you and I as a consumers. Now, somewhere I think that is one area where we need to really look at with the likes of number of startups coming in, ONDCs coming in, where by enabling the farmers to kind of choose the right market, therefore they have the empowerment to say where I can sell, to what extent. And similarly, what Hemendra was telling is that if I can buy my inputs also at a reasonable price, whichever way, like how we scout for, let's say if we want to buy a mobile phone, we go to a brick and mortar store, we also go to online, and then we finally pick and choose where whoever gives the best price. Today, I think that choice is not their farmer, either for buying his produce or even for selling. I think this is the fundamental challenge that they face. And therefore, if we can empathize, just bring that human element, then technology becomes a huge enabler. So that's a second dimension. The third thing is that, interestingly, if you look at, we are also seeing some green shoots emerging, is that the P2P lending is one part. And second, as a consumer, can they also start think about and say, if I were to work with a farmer and say a community, can we procure from them directly? So that's another area where we're seeing some startups already started working on it. Because apart from the proven areas that we are working, we also need some disruptions to happen to shake this industry, right? So somewhere, I think all these elements are going to come in, because end of the day, what we are clearly looking at is be it on the supply and demand side, think local, act global. And the templates that we can look at could be about 8 or 10, 15 templates. Then you can kind of rapidly deploy in the markets where the templates can work. So that's an answer that we are looking at in terms of connecting the farmer to the market, enabling the access, and even for the lenders, the last segment, what motivates them? Today, there is a lack of transparency as we are talking, right? What is he producing? Is he really cultivating? And what's the end use? And we also not think about, right, beyond lending to the farmer purely from a farm production activity, be enabling them for their own lifestyle needs. Say, for example, they might want to buy a motorbike, or they want to buy a small tractor. So that is another dimension that we want to bring in. And finally, I would say that we also need to start think about farmer, not just only from a farming perspective, as a family unit where they look at other ancillary activities. So therefore, around the year, they are involved in some economic activity rather than only during the harvest season or in the pre-harvest season.
Interesting. So there's a couple of very interesting points that you highlighted, right? I particularly, I think one point, something which is very close to my, heart as well. I tend to spend a lot of time, looking at this, trying to understand this, right? Is a change in the consumer behavior patterns, right? And I think one of the largest opportunities, which I think you also highlighted in the process, I think is going to be where, for example, a lot of these micro brands get built. The practices get institutionalized, and then eventually they have the power to engage with the consumer directly, right? And I think that's going to possibly increase their ability to earn substantially, right? Now, I would want to talk a little about the consumer side of the market, right? And that's largely, I want to sort of bring this into the conversation largely from a risk standpoint, right? Now, when you start looking at, the consumer's behavior today, right? And essentially, like you mentioned in one of your early points, right? That, there's OTT, we are in a connected market, right? Where there's absolute, information available at a click of a button, right? Now, that brings in a very different kind of a velocity and the possibility in the kind of consumption that the consumer wants to have, right? It's not very easy or simple to comprehend, right? Now, what that does is that it puts a lot of pressure on the entire supply chain and the production backend, right? Agri is something which of course is natural, right? It takes a certain amount of time, right? The consumer preference could move on from where it is, which essentially means that the risk is not, gets built into every single model or every single layer. Sorry, my bad. Across the entire value chain, right? And this is a tendency which is here to stay. I mean, we become an information first market in that sense, right? And this is not just a phenomena which is say Indian, but this is a phenomena which is global, right? And then that puts lending across the category, right, even more. It makes it even more complicated, right? Nitesh, would love to hear your thoughts on this change in the consumer behavior pattern. Suresh, Hemendra, please feel free to add in, because this in itself is a very, very interesting and important point, right? I think this is something which is going to really define how far the fintech ecosystem goes, how agri-tech system shapes up, right? Going forward. Nitesh, I'll come to you, and Hemendra, Suresh, you can please feel free to jump in. You're on mute, Nitesh.
Yeah. So on this, especially on changing the behavior of the farmers in terms of like the new model and acceptance of the new model to them. First time acquiring the farmers or convincing them to get your services is very difficult, because they have faced that similar problem in the past where some company have come up and was not able to deliver on what they promised. So first time acquisition is very difficult. But once they see that, okay, there is a real benefit in that, then they are coming again and again. And it mostly happen like at least 2 times in a year, which is Rabi season and Kharif season. So what we have seen is like 85% as repeat clients. And that itself speaks for that change in consumer behavior, but that will only come if they really see the value. And when you talk about the calculation, it is not about only telling them qualitatively that, okay, this is there and this like quality agriculture inputs and last mile cost. They actually come down to the numbers that, okay, if you are charging for this much 300 rupees, then 200 I have to incur, why you're charging 50 rupees more. And they will do the whole calculation of financing, logistic, and then come to you that if you're charging more or less. So in terms of change in consumer behavior, so far we have seen that it will only come if there is really good value they can see.
Sure.
And it's just not the qualitative factors that we are talking about.
Nitesh, I think I'll come to you for certain executional side questions in just a bit, right? Hemendra, Suresh, please feel free to add in, right? I think you're at a vantage point, the way I look at it. Hemendra, you're at a vantage point. I mean, you're meeting so many startups, right? You're interacting with so many players in the ecosystem. This is a very, very visible challenge. I think what's happened in the last 2.5 years is a very, very interesting sort of problem at hand, right? I mean, this has just made the ecosystem so much more complicated, right? But it's also a massive number of opportunities, right? I believe, and like you said right at the beginning, right? There are many opportunities that are going to get created, right? I think Agri today has that possibility to offer, those things, right? But what's your sense of it? I mean, I am worried about the risks that are, for example, getting built into the Agri, the entire value chain, right? And that's largely because there's little change or inertia which continues to exist, right? And the consumer preference and demand is something which is changing very quickly. Do you think we could possibly, this could open up India into a very different market? More import-centric market than the opportunity that exists for our producers today. What's your sense of it? And I ask all of this in line with our core topic, right, which is that of fintech, because these are risks that are very, very important to understand. If we don't understand them right, or if we don't dissect them right, eventually we will not have the answers, which means lesser number of players and lesser money in the market. What's your sense of it? What do you see, and how do you see this the change in the consumer behavior?
Yeah, so I think there are a couple of lenses through which we should look at it. As far as consumer behavior is concerned, I would say ultimately, we consume $700 billion worth of food is going to become $1 trillion anytime soon. So we're going to be $1 trillion food economy. But interestingly, if you look at it from a trend perspective, there is some bit of homogenization in the way we consume food. South India eating chapati and North India eating rice, that's happening. We are seeing millennials, be it any part of the country, aspiring for similar kind of food. Uh, you know, home delivery models are becoming ubiquitous, omnipresent across cities and towns now. And clearly there are very visible trends in terms of shift from carbohydrates to proteins.
Right.
More fiber is being consumed, which is also reflected in horticulture demand. I think this is quite interesting, which should be case study in terms of the demand supply lag. As the demand for fruits and vegetable is going, so is horticulture consumption. So it's not that farmers are totally disconnected with what's happening on the demand side. I think it is moving in some tandem. Of course, it can be improved quite a bit. That's true for some other categories also, especially trends around healthy food, traceable food, and supply chains need to respond to it, right? So clearly, I see that demand is getting homogenized. Demand, of course, export demand is always an opportunity, but even domestic demand is a huge opportunity, and the number of consumers who are willing to pay for good quality food, I think that is growing by leaps and bounds. And I always give the example of milk. I say that it's going to become $1 a liter anytime soon, even if the dollar appreciates. And that is primarily because the base effect, the number of consumers who can afford to buy milk, has gone up sharply. Right? And the consumers who can drink milk on a daily basis has gone up sharply. The consumers who are willing to pay for packaged ghee, packaged curd, packaged paneer, packaged dahi, I think that number has grown exponentially, which is reflected into the balance sheet of dairy companies also. Right. And of course, there's a pressure on the supply chain and on the farmers to supply more milk, to supply better quality milk. So I think that is where the opportunity is, and you rightly talked about change in farmer behavior. So my thing is that farmer behavior, ultimately the market and the economics should drive it. Why would a farmer invest, let's say, in a bulk milk cooler or in a chiller for milk, right? Sure. Because if he sees a demand, if some dairy company paying 1 rupee extra for chilled milk vis-a-vis fresh milk. So I think that is what's going to drive. It takes time, but thankfully more and more farmers are digitally connected. I can't tell you the popularity of YouTube, Insta, WhatsApp, and Facebook among farmers. Probably they are big consumers of content than a lot of what we consume on a daily basis. And interestingly, they are looking for content. They are not just looking for all kind of stuff on these social media. They are looking for real content which can drive better practices, which can improve their access to good inputs, which can connect them to buyers, etc. So I think that digital transformation which is happening at a faster pace than most of us even can think about. Absolutely. Especially with broadband access and 4G and hopefully 5G coming into the picture, I'll see the whole content to commerce becoming a big sort of a business model for anyone looking at the rural India. Create content, drive good content, and sell products on the basis of it. And that can potentially also hopefully drive a lot of behavioral changes. I believe the entire extension ecosystem, which has been created since Green Revolution, which was essentially physical, will become digital. And thankfully, we have tons and tons of information available at our agriculture university, ICR institutes, IARI. There's tons of good quality information available there. I think it's time we start digitizing a lot of it, making it curated, making it very customized, depending on the type of farmer, the type of crop, the type of geography. And you are opening up a new economy altogether, which never existed. So that's my hope. That's my sort of futuristic view. But I'm hopeful that this will happen sooner.
Even I had two very interesting questions, right? And I'm, but before I ask you that, and before I put it out, between Nitesh and Suresh, right? I think the entire existence of dairy industry is that is being questioned, right? And I think that's the changing behavior, right? I mean, we were essentially as an economy designed around inefficiencies, and we continue to play it, right? And I think that's the beauty of connected markets, that people start to question it, right? And there are like trillions at at stake, right, from that standpoint. But I think that's a discussion for our next time. I'm gonna save some of that for our next discussion, Iman. But Iman, Suresh, I'll because Suresh, you're kind of doing technology, you kind of also have first-hand experience in farming, right? Iman, from you, because like I said, right, you're seeing a lot of this, and you are at a vantage point. What I want to particularly understand, right? Do you think the current practices that we have, right, which is that of distributed farming, is that even efficient, right? Because we're continuing to feed inconsistency, we are continuing to feed inefficiency, right? Fintech success is dependent on an efficient market thesis theory, right? Do you think we have to see, and we must see, institutionalization of practice? I mean, what is happening is bits and pieces of it, right? We don't necessarily have a very clear understanding of the impact of, say, all of this learning that is having through KVKs, or it's happening through, say, other channels of distribution, or content production which is happening, or YouTube and other things, right? While there is great content, there is also a lot of crap content, right, which is available, and that just brings in a very different kind of conflict, right? In the minds of the producer. Do you think it's come to a point where we are, for example, looking at vertical farming, and we're looking at more institutionalized form of farming? What's your sense of it? And Suresh, Hemant, I'd love to hear from you. Nitesh, I'm going to come to you in just a bit, right? There's a bunch of stuff that I want to talk to you on fintech. I'm going to come to you just a bit, but I think these are fundamental pieces that are very important to be answered and understood. Suresh, you could go ahead, possibly. Anything you could add?
Yeah, I think we also need to kind of think one more element, which is very strong and undercurrent, I would put it, because the eating habits, the consumerism has also changed drastically. Now, the millennials and the youngsters, the youth population, in fact, we are highest in the world now. Now, what is their preferences? So I think that is something that we also need to think about in terms of this entire spectrum of the production and the consumption. Now, we spoke about the dairy. Now, alternative dairy is that now we have soy milk, almond milk, and now we are also kind of talking about Cube, right? The Popular milk. Now, suddenly you kind of say, wow, what is this, right? So there's something, a lot of things that is emerging. So what the farming community has to really do is that start looking at these nuances and say how to kind of align themselves to the market basis, the demand. So that's one part. The second thing, historically, what has also happened is that the farmers were trying to de-risk. And that's why even if they have about 2 acres of land, probably they were doing some wheat, something pulses, to say that, look, if one crop fails, I will have other, or one commodity or one type of grain fails, I'll have a mitigation. So I think that is another dimension that is really driving their behavior from a fear of failure point of view. So that needs to be taken out. Now, one, aligning to the market. Second, the fear of failure. The third dimension that we also need to look at is that now, to what extent technology can play, it's not just limited only to the fintech, into the overall level, right? So therefore, will the farmer will have inputs in terms of what are the changing behaviors, what type of input and demand that is there, can they kind of start using it? And this is where we are looking at, the reason why I mentioned OTT is that, like, people don't need anymore a monologue or a lecture. They want everything to be a story, right? It is a soap opera. So for example, now, I think if you remember the Doordarshan, Agri-Kisan channels, everything, somebody used to come and talk. Now, today it's all need to be in a soap opera format. So people will really understand. Interestingly, what's happening, the project that we are working through Foundation, Samnati Foundation, recently we kind of developed a series of awareness videos. Now, the whole thing we kind of created is, rather than just going into a monologue or a lecture mode, we kind of created a set of what do you call Malgudi Days type concept, where we have certain characters and then kind of do everything, right, with the background. Now, that's a huge hit. In fact, on the trials that we are seeing, people are able to kind of connect there. Why not others? Even for us, I'm sure some of us who are traveling, earlier, the good old the safety norms that used to be in the plane when we go there, but then Virgin broke it when they kind of did a kind of a James Bond theme, when everybody kind of watching what needs to be there, right?
Sure.
So somewhere, I think the people need a little bit more dramatization, and at the same time, kind of create more visual. Now that, I think somewhere we need to bring it, right, from a farm to fork. And this is where, again, I see technology can play a much, much bigger role in terms of what the products that the farmer is producing or what the consumer wants, how they can connect it. So the visual appeal is something that we need to kind of really look at, right? And then your other question, right? So what the enablers can do here?
Yeah.
Because farmers themselves are not going to do anything drastically, because as we said, they have not kind of really have the risk appetite, because they are hand in mouth in most of the cases, right? So therefore, in order for them to kind of recognize better profits, and somewhere we need to kind of think about what incentives that we can do for them to do certain practices, right? So it could be like in any other sector, every other sector, we have a performance bonus. A farmer doesn't get it. So somewhere I think we need to think about, this. I don't have the answer, but this is something was lingering in our mind in terms of when we go on the field, what is it the farmer gets? Because if you go to a restaurant, you tip a bearer. If you go to a valet, we kind of tip that person. Now, the farmer is the only person we never go and tip them. All they will do is that come and sell the produce. Maybe if you're buying 1 kilo, it will be more than 1 kilo. So whereas in a branded store, they even charge for 1 kilo, 252 grams. Now that, I think this is a fundamental behavior. Now, though we are talking about fintech, we also need to look at it as the end of the day, it's not the technology, the human element. I think somebody was talking about artificial intelligence, how it can work. I said, boss, first we need a human intelligence in this whole thing before we talk about artificial intelligence for this segment that requires that human touch with the enablers in various forms.
Interesting. Hemant, I would love your comments on this one, right? Because I think you've been a proponent of innovation across, and like I said, right? I mean, when you have a distributed workforce, it leads into more and more inefficiencies, right? But do you think it's time for us, and trying to match up to the demand of the consumer, right? You can only do it at a war footing in a factory-like setting. What's your sense of it? I mean, we have a bunch of examples of it. Love to hear your thoughts.
Yeah, so I think first of all, I would like to mention that when you look at the entire food value chain, farmer is, I think, sharing a disproportionate part of the risk. It's significantly higher for the farmer than rest of the value chain players. So we need to see how do we de-risk. That to me is as important as any other intervention that we need, be it better credit, low cost of capital, etc. And to me, yes, you are right. It can be reduced with some bit of consolidation. And there are 3 levels of consolidation which are possible. So one is aggregation of farm produce, in some form or shape, which is, I think, done by a lot of startups already. All the big ones into market linkages, including Samunati and Waycool and Dehat and Ninja, Palmart, everyone is driving that segment. Second, I would say aggregation of farmers themselves, right? Which is being attempted through FPOs. It's of course a government initiative, and there are there are some success stories, but a lot to be done. But I believe that is another opportunity to bring farmers together, so they can buy together, they can sell together, and have much more negotiation power than what they have today. And third piece, which is consolidation of land, farmland, right? I think that is, of course, not happened because of multiple reasons, there's a lot of, regulations and a lot of challenges which government has in making this happen. But I believe farmers are smart enough. And to my surprise, of course, there's no statistical report available on it, but a significant part of Indian farming is already lease farming, done by sharecroppers, not the farmers who really own the land. It could be even to the extent of 30 to 40%. Right? And if that be the case, I think there's a case for land consolidation too, where we sort of get farmers together, and that also bring a lot of economics, especially let's say if you have to fly drones, right?
Yeah.
If you to set up a processing unit, you have to set up a storage unit, you need a critical volume, which is not going to come from 1 or 2 farms, it's going to come from a part of the land. So I think those are 3 levels of consolidation I see happening at different pace, and of course have their own sort of nuances which we need to understand. But as I said, it's ultimately the market which is going to drive this consolidation.
Sure.
I see a lot of farmers doing non-farming jobs. Already the share of farm income in total farmers' income is only 40%.
Right.
So we're going to see a lot of motivation to look at ancillary sources of income. We are seeing dairy, we are seeing poultry, we are seeing fisheries, we are seeing beekeeping.
Interesting. Yeah.
So that will again have hopefully help farmers to de-risk in some ways, because you have even now 60% of income coming from other sources. Right? So I think that is what's going to happen. We're going to see farmer participation in the value chain, which till today has been up to the harvest.
Right.
And that's where the challenge is. Farmer is selling the produce when it is cheapest to the nearest mandi. That's 80-90% of Indian farming, right? How do we create opportunities farmer to participate in the value chain, which is going to redefine the whole value chain? And when I say participation, it essentially means building your products, sell products instead of commodities, and sell brands instead of products. Can we have sort of an environment where farmer brands can be created? And I think that's the possibility today, which probably never existed. Essentially, given the fact that there's so many innovations coming, there's opportunity for vertical integration, and there's so much digitization happening, that it is possible to trace the supply chain and build supply chain which can potentially help you sell brands. Branding in food is nothing but supply chain control. It's not about packaging, your discounting, your promotion, your TV ad. No, it's not that. Can you sell the same quality of spinach 24/7, 365 days a year? It's humongous challenge, right? And for that to happen, you need to control supply chain. So I think that's where I see things changing, and essentially farmer becoming more proactive in building those value chains which never existed. And thankfully, a lot of these innovations coming from urban India help them, facilitate them, and financing fintech for sure, because as I mentioned, for any business model to prosper, scale, the capital need to be available. And in agriculture, it's not just the cost of capital, it's the timeliness of the capital. If you miss 5 days, if you miss 6 days, you miss sowing, one season is, it's not that, you can wait for 15 days for your, pension. It has to come in time. So I think those are the various dynamics. I don't think I've answered your question, but I just wanted to.
No, you have. In fact, you've highlighted some very, very interesting points, right? I think what I particularly like, is the role of the farmer, the change in the role of the farmer, right? I think that's a very, very pertinent point that you've highlighted, right? And in my mind, I'm actually questioning, right? Do we even require? I think what is important, like you said, right? You need spinach 24/7, 365 days, and you want that kind of a quality of spinach available. I think that is essentially what you've highlighted, and that's something which is very, very important in the larger scheme of things, right? And I think that calls for institutionalization. In my mind, I'm kind of thinking that do we even require a large-scale fintech play, or do we need to sort of focus on, say, mechanization and institutionalized farming, vertical farming, and like variety of other things that are happening, right, on that front. In my mind, I'm kind of questioning that, right? I think that, but that's like some of the other points that we discussed, right? This is a discussion for a different time. I think all of this is going to take a little amount of time, right? But I think while it continues to happen, I think what we have right now is something which is critical, and it requires capital, right? Nitesh, coming to you now, deployment of capital is not necessarily been a challenge, right? India is a capital-starved country. We need capital, right? Agri is something, and especially when you talk of tier 3 and down, we've largely been plagued with private lending and all the challenges and complexities that private lending has, right? And I think in a way that's a key priority for fintechs to kind of solve, right? But for fintechs, because they're institutionalized, recovery becomes a huge issue. Collections is a massive issue, right? Delinquencies, like Himen said, of course that's part of risk, right? But because of delinquencies, risk becomes very, very collections become very difficult to sort of gets to. And then of course there are political compulsions, right? And a lot of those nuances sort of that step in, right? Because this is a very, very sensitive area. What's your sense of it? How challenging has this been for you? What's your sense of it? How are you kind of ensuring that you don't necessarily get exposed to similar risk, right? Suresh mentioned of it, right? That you have to create those endpoints of consumption and stuff like that, right? Now, that is possible, yes. but only in a limited way, right? I mean, you cannot do that for every single commodity, right? You cannot have your own distribution end point of sale, right? It'll limit your growth possibilities. I think for a fintech, the target is, how much are you lending year on year, irrespective of what kind of ecosystem that exists, right? And I think you just got to model it right. But collections continues to be a big problem, right? What's your sense of it? How are you seeing collections?
Yeah, so if it is only on the lending part of it, where you are just lending capital, then it is going to be very difficult. If you are having a product, so for Upaj model, it is package-based lending. So if somebody is doing maize crop, they need 2 packets of seeds, 2 bags of fertilizer, zinc, calcium, so on and so forth, summing up to around 10,000 worth of agriculture input per acre. So that is a product that we offer to our farmers, that if you subscribe to Upaj 1 acre maize package, then you will get all this bucket of agriculture input. And these agriculture inputs are then supplied by the distributor partner that we have in that particular area. So it ensures that end users of the funds is towards the productive purpose. So which is one of the major problems faced by the financing companies, where like most of the funds which are given by the microfinance or NBFC is used for consumptionary purpose, which results in more defaults, because once they get the capital, that capital is used for some time for some ceremony or to buy a bicycle or a mobile phone, and there is more default risk in that. But when they are getting these agriculture input, and then you are working on an aggregation model, so you ensure that the distributor partner, you have the terms and condition where there is penalties if the agriculture inputs which are supplied are spurious. So farmer can actually see the value that they've got an integrated solution, quality agriculture input and village level delivery, which is possible only because of the aggregation. Because if it is fragmented demand, one farmer, two farmer, the cost of delivery of financial product or agriculture inputs or other services is very high. But once you have that like 100, 200 farmers in one panchayat level, the cost of delivery is optimized. And then you make these smallholder farmer into an artificial kind of a bigger farmer having 100 acres of land. And you can negotiate better rate with the NBFC company, with the agri input supplier. And that's where the farmer can get benefited. But if you see, like if you're targeting each and every individual farmer, it becomes almost like that is not possible because of this last mile logistic cost of delivery.
But in this, so I understand where you're coming from, right? From a distribution standpoint, how you kind of packaging this, how you're essentially cutting on the risk, right? But collections continues to still be a problem. How does that happen, right? Because, eventually what you give out, right, they will essentially be used for production purposes. There's going to be produce has to be sold, and then the money has to come back to you, right? What is it that you're doing on that front, right? I mean, there have been instances of round tripping, for example, right? I mean, where farmers have taken a certain loan, to buy certain equipment, from a distributor. Eventually, they've gone back and sold that same equipment to the distributor at discounted price, right? Is an advantage for both of the parties, right? And the startup has little that they can do about it, right? Because recovery continues to be a big problem, right? I mean, that is, the problem. The kind of packaging that you're doing essentially is plagued with very similar problems, right? It'll depend on your ability. How well is your war chest kind of, you're funded to play this game for how long, right? Recovery still continues to be a big question, right? What's your sense of it? How do you see that?
Yeah, so what to have a healthy repayment, one is as compared to equipments like agriculture input, like the 10,000 worth of agriculture input, if they are going and selling it back, probably the logistic cost will result in they are making a loss in that, unless they have that intention not to repay the loan. And to recover that loan just on the digital presence, it's very difficult. So we have that last mile presence where the one field officer is assigned to a panchayat, and we are piggybacking on that microfinance model. So all the farmers will be in a group, and that group play out, we have seen played very well, where if one or two farmers in 10 farmer group are facing that difficulty, and you have the terms and condition that even if the one farmer default, then other group member will not be able to get our services for the next season. And we have seen that other members in the group are pressurizing or creating that social pressure where they are paying on behalf of the defaulting farmers, and then internally settle it among themselves within the village itself. So again, it comes down to the same point. If the farmers are not seeing value, they are saying this, it is just one supply of capital. And if I default, tomorrow I get the capital from some other resources, probably there is chances of default. But if they are saying that this is not only provide we are providing the capital, but also there is a tangible value which is saving on the logistic cost, availability of agriculture input at the right time and at the right price. And also in the state like Bihar, UP, MP, you will see that a lot of retail shop, there is spurious or counterfeit agriculture input which is available. Yes. All of these problems, if you are solving, then there is a willingness to pay. And this is the third season for us. And so far, like we have 100% repayment rate. We have completed two loan cycle since our inception.
Fantastic. Fantastic. Nidesh, I have many more questions, gentlemen. I mean, this is a topic which is close to my heart. I've always enjoyed, right? And like I said, the consumer landscape is making it all the more exciting, right? I think there's no segment which is as exciting as agri right now is, right? And I think possibly will continue to be that. I think, and the good part is that not a lot of these questions are solved, right? I think we need to keep looking for answers, right? And I think India is a complex market in that sense, right? But this has been an absolutely spectacular conversation. I think in interest of time, I'm gonna I think bring this one, at least my questions, to a close, right? And I'll open the floor for for any of the people who've been listening to us, for them to ask questions, right? So Vikas, over to you, if you could take it forward from here, and yeah, we're open to answer questions.
Yeah, I would encourage our audience to please post their questions in the chat box. Should they have any questions, I would request my audience to place it in the chat box.
Okay, there's a very interesting question that that has been written, and the question is: would like to know how fintech solution providers who provide financial intermediation between a rural farmer who wanted to sell their produce to a national market in the form of working capital financing or bill discounting or even payment guarantees. What we see is a lot of fintech platforms around, and none of them work on the ground as the farmers want it to be. I think that's a very interesting question, right? I think that somebody who's experienced this firsthand, I think, is possibly written it, right? Suresh, do you want to take a shot at it? You have, like I said, right? You're on both the sides. You're building the technology and you're a farmer yourself.
Yeah, I think I've read that question before. So it was interesting. So if we really look at, right, the farmer needs a single gateway. They cannot have multiple channels in terms of either placing the demand as well as for the inputs as well as for the outputs. And it's like we go to a bank or ATM, we deposit money, we withdraw money, we avail services. Now today, if you look at it, is there any mechanism that exists? Probably there are certain things that are available, but not an end-to-end. So efforts are being done. So in our own experience, what we are clearly looking at is that in fact, in Sammunati, that's what we are trying to look at, is that we're looking at both their needs, core agriculture as well as other needs, and helping them in terms of demonstrating or putting the products in terms of what is available, when it's available. One challenge here we are looking at is that instead of looking at a farmers as an individual, can we look at a farmers as a collective, so that there is a power of aggregation that comes into the picture. And second, the person who is buying, the buyer, also need not run around hundreds of farmers to get his needs fulfilled. So you will have a mechanism whereby you aggregate by variety, aggregate by type and quality, so that the better price realization can happen. Even for the buyer, they can go and get that products at the right time. So this is one major benefit or the enabler that we are seeing in the market that's happening in the recent years.
Okay, interesting. Nitesh, there's a question for you. Is it possible to have an integrated approach in fintech, input purchase and production practices, to create an absolute transparency in the value chain to support conscious consumption, at least to reduce the intake of hazardous pesticides residue, to choose the right product? Is there any tech-enabled approach to support the same? I think she's led that question by another point. For input lending / products, what is the efficient way to aggregate farmers Are there any examples which are replicable at scale? I think that's an executional question, and possibly she has an interest in fintech, right? Nitish, if you could answer that question, that'll be helpful.
Yeah, so for the aggregation model, there are like FPOs, which is government promoted. And what we Upaj is working on is a panchayat level aggregation model. So one panchayat has typically between 400 to 600 farmers, depending upon the size of that panchayat. If you are able to get around 150 farmers from there, from that one panchayat, and your fixed cost of around 15,000 to 20,000 rupees for a field employee, and then you just by giving financing instruments, or just by providing the financing, it will not be sustainable, but you have to be present, as you're mentioning, on the agri input side, and that aggregate the demand on the agri input on the financing side, and then provide that solution to the farmer. Now, second question is whether it is scalable. So the scalability will depend upon if you are in a geography where the farming practices are more or less common. Because if you are operating across 10 commodities, 20 commodities, then again, defining one product and making it scalable becomes difficult. But what we have seen in India, if it is like Bihar state, mostly it is maize, wheat, and paddy in different season. And if you are going to Madhya Pradesh, it is mostly like soya bean, wheat, chana. So that for lakhs of farmers, you can have that one common product, and it is scalable.
Super. I mean, I think it'll be nice, Agar, if you can add a comment to it, because I think this is something that you advise a lot of startups and mentor a lot of startups on, right? So it'll be nice if you could add your 2 cents.
Absolutely. I think, as Nitesh mentioned, that when it comes to Agri-Fintech, these are not vanilla products. These are not templatized products which are typically available from a bank or an NBFC. And you have to create a product around it. So it's not just lending to farmers, it's making sure that the money which is being lent is used for the right purpose, according to the right inputs, and also making sure that you continuously monitor these loans in the loan cycle. In fact, a lot of people believe that in case of crop loans, you can only do bullet collection. But I think in someone like Upaj and the few others who have demonstrated, you can even do EMI-based product, because there's a lot of non-farming income which farmer runs, and he can always repay his loan in installments that create a lot of discipline and reduces a lot of risk for bankers. And finally, the scale is dependent on your ability to recover more efficiently. And that's where I believe, again, you need a lot of innovation, especially bringing credible buyers into picture. I'm hopeful going forward, there will be a lot of digital solutions which can come on the recovery side. It will become more mainstream, but as Nitesh rightly mentioned, for the time being, is going to be a lot of physical resources which are going to be deployed. So I think you need to build some interesting solutions around that. And I think a tripartite agreement between the buyer, the lender, and the farmer would be one way out to make it really closed loop and sort of scale faster. A farmer, in my opinion, is not the one who really wants to default. He may delay for multiple reasons. Farmer, also, we don't have any sort of migration risk, because after Rabi, there's a Kharif, and after Kharif, there's a Rabi, and then that crop rotation will continue, so that he needs loan for all the crop cycles. So I think those risks, in my opinion, with innovations, you can definitely not mitigate it, but definitely you can, of course, minimize it so that these model looks attractive, scalable, and I'm hopeful a lot of mainstream banks which have relied on conventional sort of models of lending to agriculture can potentially participate. And that's where Agri-Fintech is going to change for good. Likes of SBI, PNB, BOB, Axis, Yes Bank, HDFC, they're coming together and trying to work with some of these Agri-Fintech startups, which we've already seen in the last 12 to 24 months. That's the trajectory that Agri-Fintech is likely to take, with some of these large banks embracing these models and open to work with innovators.
Interesting, Hemant. Thank you so much for your comments. I think, ladies and gentlemen, this is I would like to bring the session to a close. This has been absolutely spectacular. These things we've been able to take some questions. And I'm sure many of you have more questions. And we'll see how is it that we can best answer them. Can we possibly help you touch base with our say panelists offline or one-on-one emails? Pusa Krishi team will get back to you on that one. But this has been an absolutely spectacular conversation. Hemendra, Suresh, Nitesh, thank you so much for doing this, and Vikas, Dr. Bhushan, thank you so much for your the effort of organizing this this session, right? And to everybody out there who's an agri entrepreneur, we wish you all the very best. And yeah, keep be excited and keep it rolling. Thank you.
Thank you.
Thank you so much, everyone. Thank you so much, Mr. Agrawal. Thank you so much, Mr. Mathur, for taking the time out on a Saturday afternoon. Nitesh, thanks a lot for presenting Grey Matter's side on Agri-Fintech. Thank you so much, Mr. Venkateshan, for presenting the great work that Samunati has been doing. And with that, I would like to bring this session to a close. And to our fantastic audience that asked such intriguing questions, one of the questions I got in my inbox was the correlation between carbon credits and Agri-Fintech. And I believe that could be a whole webinar altogether. And a whole session altogether that we can think of in future. So
absolutely,
now,
I think there are many more. I think the points that we've taken, I think we should organize them much faster and much sooner.
So yeah, the role that carbon credits could play in the fintech scenario cannot be justified by an answer in 2-3 minutes. So let's keep it for the next time. And with that, thank you everyone for joining us throughout this series. This is the last planned episode of the series as well. With that, we bring Agri India Meet 2.0 to a close, and with a fantastic group of speakers. And I apologize for that sort of an intervention from our neighbors up north. And yeah, please excuse that and have a very good Saturday evening. Thank you so much, everyone.
Thank you.
Bye-bye. Thank you.
Thank you. Bye.